Testing 1 2 3. Okay there, guys. Sorry to make it a little unorganized, this one here, but I think it's okay. I'm just gonna present you the new logo of FX Geometry as well for you guys members. We're still working on the website, but today I'm going to present to you a little bit about on signals, okay, on the whole week, a little bit of market outlook this week, today especially, and we'll go through a couple of we'll go through, sorry, a couple of pairs, and then you can always ask me later on once you have watched it and gone back to it, and then ask me on Telegram. Okay, all right there, guys. So we're just looking into a couple of things. I know that quite a number of traders are wondering about Euro USD. How far more could it actually go up to? Apparently, there's just too much news out there amongst investors saying that there's just a lot more room to go up. Okay, but we as geometric traders, we want to look at levels, patterns as well, and sort of do a bit of a checklist before we decide exactly what to do or whether to trade or not for that particular pair. Okay, so here we are looking into Euro USD on the 1 hour chart. I've got the couple of red lines drawn horizontally. We've got the zones made up of 1.1845 area right down to 1.1790s area. So that these three lines here mark a sort of zone that the prices needs to go up or above that zone first in order for us to get a better idea that it's ready to go up furthermore. But at this moment of time, it's just not doing that. It's consolidating, so there may be a risk of Euro USD going sideways first before it actually goes up or down. So this is exactly what's going on at this moment of time. It is going in within the range. It is actually traveling sideways, 3 o'clock type range, but it has found a bit of a support. So the bias would be that it may actually be preferring the upside more than a downside. Now, I just want to also share with you that it's probably best for you to always apply the ADX. The ADX is the average directional movement index, which tells you how strong that particular trend is. It doesn't matter whether we are looking at this blue line here, and the blue line needs to be above that number 30 level. If it is above 30, then the trend that you are looking at that moment of time for that pair, it's either strong or weak. If it is strong, if it's above the 30, and if it is under the 30, that means it's just not ready to move. So at this moment of time, you've got some strength to the upside because it's uptrend for the Euro USD, so there is strength. Now, the reason why we use the ADX as well is because it's important for you guys who are sometimes gets a little frustrated with knowing why it's just too slow, why the market's not moving, why the pair is just not moving, that the candlesticks are not lengthening, all these kind of questions. It's mainly because of the strength of the market participation. So that ADX, the average directional movement index, will give you that idea, giving you a little bit of an idea of whether or not you are going to wait a bit longer or not long, or it's going to move a bit more, all that kind of thing. It's basically given you that hint. It'll give you that hint of how strong the market is, how strong the trend is, okay, for that particular pair. So here you've got prices now at this moment of time. Euro USD 1 hour chart is giving you that indication that it's got some strength in the trend, and that trend is an uptrend at this moment of time. You just see that there's got loads of higher lows and higher highs, and it's just and it's above the three lines as well, these three moving averages as well. So if we go into the 4 hour chart, you'll see that it just gets even stronger. But on the 4 hour chart, the ADX shows that it's just not as strong a trend. So the trend to the upside may weaken a little bit from now on until the medium term. So the medium term may be, not that sure that it will go up that much. So from now, 4 hour, from the 1 hour chart to the 4 hour, you've got that gap in between. Short term, I would say that you've got some space to see an upward type move, but not too much too fast or too much in terms of pips as well at this moment of time. The reason as well is you're looking at prices on the right trading at 1.18 I would say 1830 plus, and it's just too close to the 1.1850s area. So it needs to go above the 1.1850 psychological level before you can actually see more room to the upside. Okay, so at this moment of time if I was you, I would prefer to trade at the right time. Now, this is not really the right time to trade and just to place the trade, because it's going to be very risky for you. Anything can actually happen. So you've got like news coming up, somebody speaks, a big one of the big boys would speak, and then it would just, what do you call that, it could change a lot of things. So you're looking at prices for Euro USD trading in this range. You need prices to go above first. Now, there's no very clear pattern that I can see on the short term on a 1 hour chart, but when you go into the daily chart, basically you have got that move like a Z-like pattern that I've shared with members on the Telegram group, and this basically means that yes, it does coincide with whatever that is going on in the market. The investors are thinking there's room up, and a geometric pattern is it's matching with what the investors are actually thinking at this moment of time. So we want to always mix and match. Now, I want you to also be familiar with using the ADX every time, so that you don't wait too long, or also not be in the market when there's just no trend, because you want the trend. When there is trend, usually there's volatility as well as market participation, there's liquidity. So this would then make you riding the trend at the right time, okay, as opposed to just place the trade, look at the pattern, place the trade, but then the timing that you place the trade may be too early, may also be too late. Okay, so you want the ADX to be above the 30. All right, so that's for the Euro USD at this moment of time. I personally I'm not paying attention to the Euro USD, because the big boys are not paying attention too much on the Euro USD, because they are waiting for something else, because it's very fundamentally driven, very news politically driven as well. So there are some things that will be going on in the Eurozone. There's some more things expected in terms of money, ECB, more tapering, all these kind of things. So there are things that they need to sort of settle down. So it's not where the investors or investor traders are actually paying their attention to in terms of Euro USD at this moment of time, because they're waiting for that bigger move again. So they're just laying it low. So it would probably be best to look into the other pairs, and that is where you could actually expect more movement, and you can see that you gain more pips and faster as well compared to the Euro USD. Euro USD may be now consolidating, so it's giving you that risk element, and then you've got to wait a little bit more, and then you'll grow to become a little bit more confused and not knowing or not becoming that certain anymore with whether it will burst out, break out upwards or downwards. You see, so that kind of phase is actually happening very slowly but steadily with the Euro USD. So we want to keep that aside for now, but we want to look into pairs that may actually be what you call that, a little bit stronger in the trend, like USD CAD, for example. It is very much I would say monopolized by the movement of oil as well. So oil, as we can see, may be picking up, and when it's actually picking up, then we're looking into what do you call that, related to the oil movement. Oil movement that's going up would be related to currencies as well, especially commodity currencies, and in this case it's Canadian dollar. So we are looking at a lot of weakness of the dollar. So the dollar versus the CAD, you're looking at some more room to the downside. Now, I will just go on to the 1 hour chart. You see that the market has actually picked up, definitely picked up. You've got a trend basically. Now, the thing is that most of the traders, they get a little bit confused with the trend. They usually look into the 1 hour chart, 30 minutes chart, and then they say, oh, the trend has changed. No, the trend cannot change that easily. This is a very, very big downtrend. It may be a corrective move at this moment of time, but it's not change of trend as yet. So that's why it's important for us to match at least 3 time frames together to give you an idea. Because as you see, if you see the 4 hour chart, you could see that the prices move lower, and it is creeping up a little bit, but it's still within the limits of that downward type movement, and it is into a bit of uncertainty at this stage. It actually could also mean that it's finding a little bit of resistance maybe shortly, but it is correcting. There's a corrective move, the upward move. Okay, so we're just looking at more and more room to the downside for the dollar in general anyway. The USD index has fallen quite a lot. You're looking at a lot of fundamentally driven factors with the US dollar as well. So they have been pumping a lot of money. They're actually suffering at this moment of time because of all the amount of money that they've actually printed. They can, because they have always been used to solving the problem of the economy by printing money, because when they print the money, what happens is that they lower the value. When they lower the value of the dollar, then that actually would then make the exports more attractive, you see, and then they can cover it that way to stimulate the growth. But the problem is that that model is giving up smoke now, which means that they could do that and have been doing it for quite some time, but it may not work as effectively now in this modern world of economy. So that this is why they're actually suffering at this moment of time. And you still have got good growth numbers in terms of exports, but the thing is that it has to do with a lot of other things. It has to do with consumption, government spending, and a couple of other things that make out the GDP. So the GDP has to be broken up, with a couple of things. So the GDP, once it's broken up, then you will understand what the GDP is made of. So the GDP is not just a single number. If it's positive, oh, it's great. No, it has to be made up of all the positive elements that make it wholly positive. Then only the GDP is strong. If not, it's not. Okay, so this is what's the US is suffering at this moment of time. So there's a lot of holes in various aspects of their economy, and they're trying to fill up that hole, and then another hole appears. So this is why you're seeing loads and loads of pull out of investors, and now we've got earnings going on, and there's a lot of problems basically. Okay, but the politicians have got their own ways of solving it. Okay, they like to put up a positive, they're never negative with things. So this is another misconception that most traders get, because once they see it as positive, it is positive. It's never what you hear is what you get, or what you hear is exactly what is happening. Okay, all right. So USD now the thing is that I don't really see very clear pattern if I go onto the higher time frames, but let's just check onto the lower time frames. Now you have got let's say this one here. Very quickly, it is above all three lines, is giving you that upward tight move on the shorter time frame. But then when you're looking to the movement, now you look to the right and you see that the price is at very, very close to the 2580s area, which actually means that it might be finding some resistance there, or something may actually happen there. So you want to be aware that you are trading very close to the psychological number of 80. Okay, forgive me for all this popping up of my Skype. Sorry about that. So now if you look to the right, you look for the level now, current price, and then you look to the left. Once you look to the left, you want to look at how previous move, like this one here, is really close to the previous support. So previous support could be resistant now as well, and that may actually match up with what's going on with price, which is 2580s area. So you want to wait. Now you want to wait and look into whether or not you should ride that trend, that move, after it has gone 2580 and above, after the psychological number to the upside. If it is going lower, 2580 and below, like 2570 and below, then you could say that it is going back to its original trend, which is a downtrend. Okay, at the moment for the USD CAD. Now USD JPY, we have got a couple of things here. We as a whole, USD is on the low side compared to all other pairs. All the other pairs on the monetary policy side of it are positive. Okay, so USD on its monetary policy and rates, it's raising a lot of questions, and it's got loads of negativity. So hence the reason USD as a whole, across almost all of the currencies, I mean, compared with all of the other currencies as a pair, it's proving to be quite bearish for the USD. Okay, so for the others, it's picking up quite well, especially the euro, the GBP. So you've got bullishness expected, and you want to always look into the higher time frame as well. Now we have got a very good run with the GBP USD. It went really well. We have a couple of ABCD. We've got a huge ABCD here, for example, but within this ABCD, we've got another A, B, C, D, and that as well hit the take profit level that we were looking at. So quite a number of traders, including myself, have actually ridden that twice. First following the first pattern, and then secondly following the other pattern that came up after that. So but each one pattern, I mean the second pattern especially, confirmed the first pattern, and it formed an ABCD again. So that was a very good sign. So I want to say, congratulations to the for the guys who have for the traders, sorry, have ridden this nice trend on the GBP USD. So that was also another thing that I wanted to say. Now GBP USD has actually hinted on the ADX itself really high, so that gave a very good hint that the trend was strong, and the trend at the time, or even now, it's to the upside. So you want to look for more ABCD to the upside, and it's always best to look into the C point that hits. As you guys can see, your probability goes really high when you're very clear with the trend, and then you've got the fundamentals that backs up the current trend and the pattern, and then you look into how the pattern actually complies very well with the prices as well. But most importantly, when it comes to the pattern, you see that the C point touches and bounces off from either one of the exponential moving averages. So that is your key point, because then if you look into that criteria a lot, where the C point have actually bounced off or from, then this would actually measure or tweak your probability. So heighten your probability. Your probability is heightened by the way the C point has actually bounced. It may sound really simple, but it has actually worked really well for many years for myself. So you could see that working, and has worked or have worked for you guys as well quite a number of times. Even on live markets, you could see that happening, and you could see that it bounces off. And usually if it bounces off from either one of the exponential moving average, then it also means that it may have bounced off from a very significant support resistance level. And once it does that as well, then you look into the price action, and it does the same thing. It bounces off from very close to the psychological level or numbers as well. So this is always a very good sign. So what happens is that when we trade this way, we are already cutting out risk automatically, because it's already encapsulated, it's already inside the whole strategy where we cut out risk. So this is why it's really important, and it is increasing your probability and to hit your take profit area, and decreasing the risk level of hitting your stop loss level as well. Now I want to also mention that you guys need to be aware of your risk reward ratio. I came to notice that quite a number of traders globally, I mean, when I speak to them, I interview them, I also ask what their risk management style is and things like that. Quite a number of them are looking into a risk reward ratio of 1:3, meaning that they're aiming at 3 times in terms of profit compared to their risk. So if they're risking $1 for every $3, or even $5, so $5 profit and then $1. So it's a little bit too high if it is beyond 2. I'll be very honest. So if you're trading with geometric patterns, the best and the one that is most effective in this strategy is to tweak your risk reward ratio very quickly, meaning that just aim at 1 to 2. Okay, so 1 to 2, meaning that if you've got 50 pips, you are aiming at, or you see that the pattern giving you that, then your risk should be at least half of that 25 pips. So just stick with that first, and then you will see that you can, once you get a little bit more confident, and then you're growing your account, and you can then adjust that to yourself. But when you're starting point, it's best always to start with a 1 to 2 ratio first, okay, because that is going to be statistically proven. It's mathematics as well that works in its own magical way. So it's always best to maintain that 1 to 2 ratio as opposed to the other ones. Okay, all right. So let's see what we have here. I just want to move this thing here. Okay, now a couple of other pairs. We have also got something here which is AUDJPY. I just want to share it with you. It's looking like it's finding resistance very nicely here, which is very close to the 3 moving averages as well. It might be a very good place where it has found resistance if it is the C point as well. So this could potentially be an A here, and then a B, and then a C, and then downward move. Now the current trend, it looks like it's finding resistance, and you've got you've got lower highs, and then you're finding the market for AUDJPY, I mean the pair itself, is finding its way to weaken somehow. It may actually have that, but let's just test the trend first, and we could see that that movement downwards itself is giving you that hint that it might want to or it might prefer the downward type move. So if we're looking into the 4-hour chart, let's just check on trend. You can see that it moved slightly higher, lower here, but the thing is that it's finding support as well. Potentially it has moved into uncertain territory as well. Let's look into the daily chart. Now the daily chart, as it's still proving to be more to the upside, so let's move for lower time frame. Now if we go into the 15-minute chart, it is still giving you that hint to the upside, and then you have got resistance right there, and then you have got it moving slightly lower. But then when you move to the upside, then this actually hints an upward move. Now this is where you've got a number one mistake of most traders as well. Now very easily most traders will start to draw as what I've just said, ABCD there, and okay, that's A here, B here, C, and then okay, let's aim downwards. But as what we did earlier on by comparing the time frames, as you can see, the time frames further, 4-hour and daily and the rest, didn't really hint a downward move or a downtrend really strong. So you would get yourself trapped here if you're actually trading an ABCD pattern to the downside, even though the C point looks quite nice. But you don't want the C point to look nice by bouncing off from either one of the EMAs, but it is only the trend that will actually help you find or spot a really high probability one. You don't want a pattern that looks really nice with a C point that because it can actually trick you by having a C point really nicely looking to you like, wow, it's going to just drop, for example. No, we don't guess it. Let the market give us hints, but then we confirm on our own. Okay, so here itself, when you look into the higher time frame, the medium to high what do you call that, time frames itself is hinting us that the market itself prefers an upward type move. If it is upward bullishness, we want to look for bullish patterns only. If it is bearish, we want to look for bearish patterns only. Okay, so here it's a no-go. Even though I've hinted you a little bit there, I just want to go through with you in the minds of most traders. It's like, oh, they get very excited. They look at that pair. Okay, yes, it's an ABCD to the downside. Maybe I'll just trade for the short term, just maybe 30 pips, 50 pips. I just want to ride the downward trend because the C point looks good. No, don't do that, because that will then help you multiply your losses. Okay, so be very careful with that kind of approach or methodology of trading. Okay, so there you go. Now you have got the trend here on the 30 minutes. Sorry, it's on the upside, it's above 30 as well. Then you got a 1 hour, you see that it picks up right there, and then a 4 hour, it's not very strong. But we do not care about the ADX as much as we care about the trend. The first thing is priority. Priority is that trend first, and then once you're clear with the trend, then you look into the ADX, and then the ADX will reflect that trend that you are looking at, whether it's an uptrend or a downtrend. But you need to match up at least 3 time frames. Okay, there's no harm even to go from the very beginning of 5 minutes, 15 minutes, and try to get that story of the trend. That is even a better thing to do, and then you zone in onto the 3 main time frames that you yourself, wish to trade. Okay, now let's look into a couple of other things. I'll try to release a couple of other videos as soon as I get something that's high probability, because I want to remind you guys that I am a fan of picking out high probability trades and low risk, and on average I want to look into pairs that can offer at least 200 pips on a 4-hour chart, so that you can pick your time frames, lower ones, and ride that 200 plus pips on little bits. I rather do that and guide you to do that, because if you're only looking for daily signals every day, like every day you want to trade, that will be a very big disaster. I'll be very honest with you. It'll be the worst case scenario is when you have in your mind that you need to trade every day and you want to make 50 pips per day. I'll tell you that that doesn't really work as best as planning a big pattern and then breaking it up, because then you can actually trade every day based on that big pattern alone, maybe for 5 days in a stretch, just riding it, and that is better. You concentrate on one pair, and that pair give you high probability pattern. You can open another few depending on your equity, of course, but then you are actually multiple entry on a single pair, and that is even better. It's much more fulfilling, and you don't actually have your heart beating too much, because if you're going to mix up all the high probability and low probability trades all together, what will happen is it'll destroy your account, and then it'll create low probability for your entire account. It's just like mixing bad apples with good apples. At the end, it'll all be bad, you see. So we don't want to do that. Okay, so I'll share more videos later on as well, and I'm just testing out this video as well. I want to see how it goes, and then we can I'll produce more videos today, and we will see how it goes. Okay, thank you.